Rates in the US come down, rates in Japan come up, carry trade starts to get compressed, and then people start to say, oh, okay, my profit's lower and it's maybe going to get even more low, so I need to unwind this trade.
So it's the market makers again that took advantage of the situation and that news to destroy the market. It's too predictable that it went into one big area of liquidation.
I'm going to share with you two expert opinions. One with Patrick, who's a crypto investor and trader and a friend of the channel, and the other is Sebastian of AQUANOW. Sebastian is a longtime member of my Web3 founders community and has a ton of TradFi experience, and he understands how traditional investors think. This is important so you can understand what you should do moving forward. Take a listen to Sebastian break down how the Japan carry trade unwind shifted the market sentiment.
Rates in the US come down, rates in Japan come up, carry trade starts to get compressed, and then people start to say, oh, okay, my profit's lower and it's maybe going to get even more low, so I need to unwind this trade. What ends up happening there is that you get a little bit of like a rush for the exits. And the risk manager comes around to the trader and says, okay, tap on the shoulder, I don't care, close your positions. And then that's what I think you saw on Monday when that VIX really spiked, is because people just had to go out and hedge their books or get off risk, get long ball, and then you got this huge kind of spike.
Meanwhile, Patrick is a bit more blunt about what happened.
So it's the market makers again that took advantage of the situation and that news to destroy the market. It's too predictable that it went into one big area of liquidation. Okay, so over the last 6 months, you see that there was a lot of liquidity around here, and the wick went all the way to that point. Why we did not go a little bit further? It's because they wanted to grab this, then they pump it back. At this point, I'm not even sure if not they're gonna use another news, and I think they probably just use the news as a reason to push the price down like this. Otherwise, without a catalyst, they would have too much of a target on their back. Because I really don't think retail was expecting such a decrease, so people were not trying to sell and that much. It's really like it was too fast and too quick for people to really react unless you're using tools to do it at that speed, which is why I think it was market makers.
I asked Patrick on why he's so convinced that it wasn't retail and what's the overall motivation for market makers here. Take a listen.
The thing, let's break down the market. Yes, retail's sure it's a big chunk of users, but they are not coordinated. So unless like you are talking about GameStop, where there was massive collusion and coordination between them, typically speaking, I would say that a large chunk of the retail users don't pay attention to the news. They buy their crypto, and then maybe 6 months later they realize, oh, hey, I made some money. Oh, sorry, I lost. They don't really pay attention to that level every day, every second of the day. So the thing, it's only a fraction of users that were aware of that Japanese carry trade going on, and people were, I think, overreacted way too much. So I don't think people were expecting that much because people were not protected, that there was a lot of long that got captured along the way. So that's why I really think it was just organized by market makers to go grab that liquidity in preparation to push the price up. And I think if I were them, and let's use some psychology behind this, you crush people once, then they will be a bit more safe next time they put their longs. Maybe they'll put a bit less leverage. Crush them again and crush them maybe a third time. Eventually, they'll just not stop using leverage entirely because they'll be really tired of losing money. So I think if you do that in a fast enough sequence, then your order book here will be clear of high leverage longs, and then the market makers can really push the price up without getting the retail to be rich too fast and all that stuff. Because remember, they want the retail to come back and chase price when it goes up. Otherwise, the price is not going to keep going up. I think if you have too many people stacked with high leverage below price and they're safe, the market makers are not going to make as much money because when they push the price up, too many people in the industry will make money along the way, and it's kind of a PvP type of environment right now.
Do you agree with Patrick here? Market makers are in the business of making money, so nothing that Patrick says is out of the realm of possibility. But here is something that both of my guests agree on.
Typically speaking, if a war like happen, what's going to happen is should go up, right? Because in a period of uncertainty, you want to get into some sort of store of value. Bitcoin makes sense, especially if you're stuck in that war in that region of the world. Where do you put your money? You cannot keep it in the bank. So where do you put your money? It makes sense to put it in cryptocurrencies. So
Like if you think about it, crypto is a pretty short ball asset right now, right? I mean, yeah, Bitcoin has this kind of natural kind of bid in it when crazy shit happens sometimes, but it's like gold, right? In COVID, gold initially sold off hard too, and it's like, wait a minute, I thought this was supposed to be a safe haven. But when shit gets really scary, people want to own the U.S. dollar, and that's it. They're like, give me cash, or like whatever cash in there, like maybe euros if you're in Europe, but most likely you probably want the U.S. dollar. Then what happens is the dust settles, and people are like, okay, what's going on? Oh, the money printer's going back, or like we're starting to like stimulate economies with that. Then let's go back out. So but crypto markets take their cues from regular markets too.
Patrick believes Bitcoin is a flight to safety, and Sebastian, although not right away, does believe that crypto eventually gains interest when the dust settles. So, buy more Bitcoin. But they are not going to agree on everything, like Ethereum.
Ethereum's doing what Bitcoin did when it had its first ETF launch, kind of a sell the news moment, maybe pretty heavy redemptions coming out of the ETHE.
if you look, for example, on the second around this, you see there was $42 million, $25 million. But if you look at the Ethereum ETF, on the second, okay, there was zero there, but on the fifth, there was 47 million. There was 109 million here. Actually, it looks like there's more buying volume on the Ethereum ETF from BlackRock, in a sense, since they launched. I don't know if that's just catch up because it's new, or if it's because the customers of BlackRock understand technology better than they understand the store of value. So we don't know what is the between the two just yet, but I think it's quite interesting. And you see the flow was really aggressive in terms of Grayscale selling the Ethereum at the beginning, but now it's significantly slowing down. So I think we're gonna see some pretty massive rebound on the Ethereum price soon.
Ethereum ETF inflows appear to be on the rise. So, what should we do next? I asked both Sebastian and Patrick.
Keeping an eye on the VIX and watching it calm down, and then that'll kind of, I think, be that's just something you guys can watch easily. If like throughout the day, if like today, for example, we get this another little turnaround and the VIX spikes back up, then like yeah, like we're not there yet.
You need to make sure that your stop loss are pretty tight, and you accept that they will take out your stop loss. Otherwise, you use less leverage. It's the other option. Either way, you have to be safe. You need to survive this. Otherwise, if they wipe you out, you're not there to benefit from when they really push the price up. So,
Do you agree with Sebastian or Patrick? Let me know in the comments below, and I'll catch you in the next video.